Hi traders, and welcome to this week's weekly recap. This week we're going to be covering gold, crude oil, and S&P 500 futures, and we're going to start with gold right here. So this week we didn't make too much headway. We kind of just remained in balance. As you can see, all the profiles are overlapping, values overlapping, and we got a very narrow range on Friday. Now, this is something to note because this has actually been the narrowest range of the last 15 sessions. And with volatility, it moves in cycles, just like markets have different cycles. So we're going to go from volatility expansion to volatility contraction to volatility expansion, and it's a gradual cycle. So when we see that the market's coming to a 15-day narrow range. So we've had the narrowest range in the last 15 days, and it's like you're putting a spring in between your thumb and your first finger and squeezing it down, and wherever that one of those fingers gets released, boom, that spring's gonna launch. So when we have a tight balance like this, and especially an NR 15 day, so NR just means narrowest range. So we got an NR 15 day. That's gonna be arising our attention to, okay, we could have a huge move come on Monday or in the days to come. So we definitely want to keep our eye on this because this is looking like a big move is going to be coming in the future. If we look out a little bit further to the weekly chart, we were actually in a year and a couple months balance area. We broke down. Sellers were not able to overcome the buyers. Buyers stepped in and pushed us back into the range. I have seen some higher time frame sellers step in last week. So let's see if they're going to defend their price in the days to come. In terms of biases, I don't like to set a bias whether I think bullish or bearish. And the reason for that is because when you set a bias, you get married to that decision. So if you think, oh, the market's going up, even if signs tell you the market's going down, you're still going to think, oh, the market's going up. So what I like to do is react to what's going on. I have multiple scenarios in the day that could possibly happen, and that's how I play it. Could we break up out of bounds? Could we break down out of bounds? Could we do A, B, C, D? I got different scenarios ready, and I'm really flexible so I can move on to the next one. You never want to just have a bias where you're thinking, okay, I'm just long. It's going to be long today. Oh, I'm going to have all these, it pulls back here, I'm going to buy long. Yes, you can think, okay, these are my long setups, but to think, oh, this is just a bull day, especially when you're a day trader and you can trade both ends of the market on the same day, is not the greatest idea. So definitely going into Monday, we're gonna look for hopefully some explosive movement with this NR 15 day, and keep your eye out on gold. Now let's move over to crude oil. This week in crude oil, we didn't really get much gain either. It's looking similar to gold. We've been balancing for the last 5 sessions, as we can see values overlapping here. And we are in a large downtrend, and we hit resistance on the daily. We hit it a few times. Sellers haven't been pushing aggressively this week as they were in the previous weeks. So there is potential to break out of balance to the upside, or the higher odds plays to the downside since we are in a major downtrend. But we definitely want to watch this. There's a chance that we could just open within balance and remain in balance for a couple more days. It's not too certain at this time. We're just going to have to read the market as it's open, see what it's telling us, and act accordingly. Now let's move on to the S&P 500. Okay, here I have a daily chart of the S&P 500 mini contract. What we want to note here is that last week when we broke down, we had a pretty big downtrend, well, pretty big correction off the highs, and we tested resistance, tested resistance, tested resistance. Then we finally broke through, and the buyers were pretty aggressive. And in 2 days, we almost recouped that whole entire correction. So that's pretty strong for the buyers to recoup that much ground that fast. And we tested the high. Now the high is pretty weak up here, so I don't expect it to hold, even though we sold off into Friday's close and a little bit after the close. So yeah, we sold off pretty sharply. We had excess on the high, but we've had multiple tests of this level. So multiple tests of this level is definitely weakening it, and I would expect that this high is not going to hold. So come Monday and the days following, I'm thinking that we're going to be testing this level again. But we do have excess on the high, so maybe we retrace a little bit and then go for it again. But I don't think this high is going to hold. I think we're going to make it to all-time highs pretty soon in the future. So that's something to keep your eyes open for. Now that's all for this week's recap. I hope you found this video useful, and if you did, you can find more videos like this on my YouTube channel, Optic Trading. I'll be adding content often, so be sure to subscribe. If you're looking for a complete education that has been built by a full-time professional trader, then I suggest you visit optictrading.com and check out the professional trading course. The link will be in the description, and thanks for watching. Bye guys.